The market ticker flashes in the pre-market grind, hovering near the 30-cent threshold, a seemingly unassuming micro-cap digital footprint that passes across the Bloomberg terminal screens of mainstream financial media without a single blink of notice. To the conventional Wall Street analyst chained to legacy quarterly metrics and standard discounted cash flow templates, Datavault AI Inc., NASDAQ DVLT, looks like just another speculative artifact drifting in the vast sea of small-cap tech equities. But beneath this surface-level retail narrative lies a fascinating, highly complex structural arbitrage opportunity involving enterprise data monetization, high-performance computing software licensing, and real-world asset tokenization. While retail chat rooms buzz with short-term momentum bets and standard social media sentiment scans, institutional insiders and specialized technology aggregators are quietly positioning themselves around a massive structural bottleneck: the valuation, security, and monetization of enterprise data in an era where raw, unstructured data has become the most valuable yet least liquid asset class on the corporate balance sheet. Standard financial reporting completely misses the physics and architectural mechanics of how modern AI-driven ecosystems ingest corporate records, utilize generative models like IBM's Watson X, and transform hidden corporate data ledgers into verifiable, immutable digital assets. This is not just another software stock story. It is a deep dive exploration into how legacy hardware and audio technology roots transitioned into a cutting-edge Web 3.0 data management powerhouse, utilizing high-performance computing frameworks and patent-protected data architecture to alter how modern enterprises handle information governance, privacy compliance, and digital twin creation. As daily trading volumes fluctuate under the weight of broader macroeconomic jitters and interest rate uncertainty, the invisible hand of institutional positioning tells a much more compelling story than the daily price ticker indicates. While retail traders are routinely shaken out by sudden liquidity contractions and micro-cap volatility, smart money participants utilize these periods of low volume and compressed valuations to quietly accumulate positions in companies building the core infrastructure of the decentralized data economy. Market makers and specialized tech-focused micro-cap funds understand that structural transformations do not happen in a straight line. They require agonizing consolidation phases where weak hands surrender their shares out of fatigue. This friction between impatient retail speculation and patient institutional accumulation creates a classic behavioral divergence. Every time a sharp intraday flush occurs, seasoned market participants look past the immediate price noise to evaluate the underlying book of business, intellectual property portfolios, and expanding enterprise partnerships. How are you playing this current micro-cap liquidity cycle? Are you accumulating shares during these quiet consolidation phases, or are you waiting for confirmed macro breakouts before committing capital? To truly grasp where Datavault AI stands today, we have to strip away the superficial layers of its corporate evolution and examine the mechanics of its operational segments. The company's origins trace back to its days as a specialized wireless audio and semiconductor pioneer, formerly known as Summit Semiconductor and later WISA Technologies, before executing a transformative corporate pivot via an asset purchase from Datavault Holdings Inc. and a subsequent name change to Datavault IA. This lineage is not just a historical footnote. It provides the company with a dual synergistic platform framework, combining advanced data science and acoustic science divisions. On the acoustic side, patented technologies like WISA, ADIO, and Sumerian provide foundational spatial and multi-channel wireless HD sound transmission capabilities, featuring advanced timing, synchronization, and multi-channel interference cancellation. Meanwhile, the data science division leverages Web 3.0 and high-performance computing infrastructure to deliver experiential data perception, valuation, tokenization, and secure monetization tools such as Datavault, Data Value, Datascore, and Datavault Bank. This unique dual-threat architecture allows the company to serve diverse, high-growth verticals, ranging from sports, entertainment, and events to biotech, education, fintech, and real estate through its information data exchange and digital twin offerings. Looking ahead, the multi-year growth catalysts for Datavault AI are anchored in its positioning as a technological gatekeeper for secure, privacy-compliant data governance and RWA tokenization. As mega-cap tech spenders and global enterprises pour billions into artificial intelligence infrastructure, they run headfirst into a massive wall of regulatory scrutiny, privacy violations, and data silos. Datavault's integration with enterprise ecosystems like IBM's Watson X provides a compliant bridge for organizations to harness AI-driven data valuation without exposing sensitive proprietary assets to regulatory penalties. Furthermore, aggressive corporate maneuvers, such as the all-cash acquisition initiatives targeting cybersecurity and compliance platforms like CyberCatch, underscore a strategic push to consolidate essential data protection and verification layers under one unified umbrella. Of course, this path is not without its risks. Microcap execution challenges, capital expenditure cycles, and the inherent volatility of technology licensing business models require constant vigilance. Yet for the investor willing to look past short-term price noise and examine the deep structural architecture of enterprise data monetization, Datavault AI represents a fascinating case study in how intellectual property and high-performance computing can redefine value creation in the digital age.